I'll, of course, recap today's stock market activity. Then we're going to get into very interesting subject, very timely subject. Well, as all of you know, I devoted pretty much the entire show yesterday to the Federal Reserve's interest rate decision. You may be going, well, wait a minute here. They didn't do anything. Exactly. But the biggest takeaway, which is going to tie into today's show that Dwight's going to enlighten us on, is this. The biggest takeaway of Jerome Powell, and this all happened, of course, in the press conference afterwards, is the Fed is pretty much out of the interest rate cut picture. I think if we took all 19 voting members of the FOMC and we set them in a room, guys, and we closed the doors and shut the blinds on the windows, and we said, okay, talk to us one-on-one, not one of them would say they anticipate an interest rate cut this year. I think it's really that bad with them. Even though, they did the dot plot yesterday, that's where they get to individually select, when they think rates are going to go down and some other economic data. I think there was one or two that are calling for a cut this year. But the consensus and the takeaway, if you listen to Chairman Powell's press conference for nearly an hour, he's just like, there's no way. I mean, you look at the PPI data that we got yesterday, you look at, all this data. And again, as I said, guys, we had this PPI data that came in yesterday. And as I said on the show, and you guys know this, we talked about it so much, of course, over these last few weeks. You look at this PPI data and you go, wait a minute, this is February's data. This is not even March's data. This has nothing to do with the higher oil prices. But yet here we are dealing with a PPI up 0.7% month over month. And remember, the expectation was 0.3%, right? So more than double. And, you start looking at that and you go, well, geez. And then on the year over year numbers, trying to look at my notes here. I'm trying to remember, where were we on the year over year? I forget what the number was, but I mean, we're like in the 3% range. I think it was 3.1, somewhere around there. I'll look it up during the break. But anyways, long ways away from 2%, right? That the Fed wants. They look at PCE, another calculation of inflation. But the bottom line, I don't care if you look at CPI, PPI, PCE, all these three major measures of inflation, we're nowhere near the Fed's mandate of 2%. And Powell said it yesterday. I don't know if you guys caught that or not. Powell said it yesterday. They're very, very frustrated that inflation hasn't come down. Matter of fact, it hasn't come down in 5 years. And then he is also very frustrated about tariffs and how they're, injecting into the inflationary picture, which he still had the guts to say, but remember, tariffs are temporary, as far as the inflation is concerned. Well, I don't know, guys. It's going to be a year from tomorrow or next month that we, have had these tariffs, and I've only seen inflation really do one thing, and that is go up since tariffs came out on top of everything else. So, the bottom line is the Fed's out of the picture. So now, how are we going to relate that to today with the boys? What does this mean for your mortgage rates? What does it mean for home prices? What does it mean for your ability to buy or sell a home? The whole world really changed as far as mortgages and the housing market yesterday based upon Chairman Powell's comments and the Fed, again, being out of the picture. So are there some opportunities? You bet. And these two gentlemen are, of course, going to bring it to us. But it's going to be really interesting to see what happens. Dwight, yesterday, obviously you were not on the show yesterday. Did you see much movement at all in mortgage rates yesterday or today? Matter of fact, let's just jump right to the 30-year mortgage today, because that's really the heart of it. And then I'll get to the stock market recap.
John, we got 3 reprices yesterday. So yeah,
explain to the audience what that means.
Well, so we try to get, it's behooved to the lender to get out their pricing as soon as they can. Typically we get it, Pacific time, probably 6:30, 7 o'clock in the morning, right? Because you already got people calling you. What's the market doing? So, but sometimes you can get ahead of it and the market starts to move. Let's say yesterday negatively, there were quite a few organizations that probably repriced 2 or 3 times. You had one today even, John. We had one repriced for the negative today. These are things that we haven't seen often enough. This goes almost all the way back to the financial crisis, where you saw multiple rate increases or that, and it's all off the headlines, like you said. That there's nothing other than the headlines that are driving everything. And yesterday wasn't a very positive day, I don't think, for the mortgage world, the people in the mortgage world. And so John, today we lost another 7 basis points, 6.43 on the 30-year fix. Almost 6.5.
5.99, as you say a few weeks ago, to 6.43. Unreal.
And John, keep in mind, this is the best client. This is the 780 credit score at a point. So you're at 6.43. So you've got a 720 credit score. You're six, you're 6 3/4 ish today. Yeah, yeah, yeah. People that were looking, I had a couple clients that were looking, hey, I need to get out of this. I need to refinance for a couple multiple reasons. Now it's like, well, maybe I'm going to hold off on this.
Mm-hmm.
I mean, you got an application going, you got an approval, go through the whole approval process, get the appraisal, but I don't know if they're going to want to close right now, which is a tough one.
The mortgage application data yesterday was absolutely terrible. I mean, the consumer, as you know better than anybody, and Aaron, the consumer is so absolutely rate sensitive. And now you have the entity, the Federal Reserve, that I won't say controls interest rates, but they set the tone for the bond traders who ultimately control interest rates, saying, look, we're going to, of course, we're going to take it 1 month at a time. But he made some comments, and I'm paraphrasing, something along the lines like, how can you expect us to raise interest rates, or I'm sorry, cut interest rates when inflation is rising, right? They can't do it. And so, I mentioned you yesterday on the show, Dwight, and I said, look, the only hope that we have, in my opinion, if I was an economist in a mortgage service, I reach out to you every day and say, here's where I think things are going. My only hope at this point is you do get Kevin Warsh again, if he's confirmed, that he again surprises the street with a cut. But here's the thing, guys. You've got 19 people sitting on the FOMC, the voting side of it. 12, if I remember, 12 out of the 19 yesterday called for one interest rate cut. That's what the number was, 12 out of 19. So that's just one cut. But do you think that he is going to have the power, being brand new, to persuade this group, which, there's only really, if you look at it off the top of my head, what is there, maybe two, kind of quote Trump handpicks that are in there. The rest of them are like, they've been on there a long time. They're not really politically motivated. They don't really have any incentive to please Trump, that type of thing. So is he going to have the power to coerce them to say, guess what? Interest rate cut.
Yeah. Yeah. No, I agree with you, John. And now you got Powell's going to be on there. Did you see that? You dropped the DOJ dropped the lawsuit, or I'm staying on. Have you seen that?
Yeah.
Oh, so
absolutely.
I think he'll stay on, and that's an adversary. He's got a couple. Cook. He's got Cook and Powell. That they're going to be adversaries. I agree with you. I don't think he's going to be able to do much very quick. Maybe over time, but.
And the lawsuit, again, Dwight's referring to is I mentioned this yesterday also, the lawsuit from the Trump administration against Powell and I don't know if it's to the actual Federal Reserve. I know it's, definitely to Powell in regards to the budget overruns of the renovation of the Federal Reserve building there in Washington. Do we not have better things to do with our time and our taxpayer dollars and so on and so forth? Go after probably the most ethical man in the entire world, meaning Jerome Powell. I don't know. Yeah. Sit here and I shake my head.
Very confusing, isn't it, John? Very complicated and confusing right now, and it seems very.
I made comments yesterday. I said, I'm sure most people would agree if you watch the chairman's speeches and news conferences and things like that, you can tell he's overall a pretty happy guy. He's a very serious guy, but he's overall fairly happy, nice guy. He wasn't that way yesterday. Matter of fact, he was forthcoming when he said, look, I know somebody asked a question. He answered, and he goes, by the way, I'm going to answer 3 questions that I know all of you are going to ask me. So let's get it out of the way. Am I staying on if Kevin Warsh is not confirmed and we don't have a chairman? Answer is yes, I'll stay on as pro tem. Then he said, also, yes, I'm not leaving until the lawsuit, as Dwight just said, the lawsuit is taken care of. And I forget what the other third thing was, but he was very forthcoming. He'll do that. Of course, he'll talk very straight at you. And then he said, I'm not talking about it anymore. And of course they didn't. So it was not good. And I joked yesterday, I said, look, I tracked where the Dow was when his speech began. We were down a little over 400. By the time his speech ended, roughly 45 minutes or so later, we lost another 200. We were down over 600 and ended up closing the day down over 700. Wall Street didn't like what he had to say. And so, both of you, I'm very, very curious to see and hear from you what you're seeing, hearing, et cetera, in regards to what this means now, because all of our world's kind of changed, right? Wall Street was very much looking forward to interest rate cuts this year. Off the table. I know you were, Dwight. I know you were, Aaron. Misery loves company. All 3 of us are being affected by what the chairman had to say yesterday.
Well, John, and I was watching a commentary, and it was basically saying he's got very limited time to either change the perception of the voters, or this could be really, really
You're
a
talking
bad
Trump.
thing. Yes.
You're talking Trump.
At
Yeah,
the
with the midterms.
midterms.
Yep. Yeah, I
Yeah.
know.
I mean,
It's
you've
all
got to
over the
turn
place.
this. I do like they seem to be very forthcoming. I mean, they're having lots of press conferences around the war. I mean, it just seems
Yes.
like a daily
Yes.
thing, which,
Yes.
a stark contrast to the last administration, but still,
Yes.
yeah,
Absolutely.
I just don't know if they're moving the needle much on the perception.
Well, I know we got to go to break, but I said this also yesterday. This is just me talking personally. I'm not talking, as the radio show host or anything. I'm just talking to me personally. I'm very, very concerned about 5,000 Marines heading there, amphibious unit Marines heading there. I was watching video last night of them loading up the ships and all of their tanks and various equipment. They're not going there to set offshore. There's going to be, in my opinion, boots on the ground, and that's going to be the next leg down for this whole mess. It really is. I don't know. Maybe it's a threat. Let's hope it is. But when you start seeing boots on the ground, that's going to be a nasty thing. So, all right, let's take it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, my dear. Happy Thursday to you. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of On Q Home Loans and Mr. Aaron Clark of Edge Realty. All right, here we go. Lots of periods where we were plummeting due to oil prices rising. Things finally settled down going into the close, and we were down, but not all that bad, not considering where we were. All right, here's the damage. 204 loss on the Dow. The closing level 46,021.44% decline. NASDAQ down 62.28%, closing at 22,090. And the S&P 500 giving up 18 points, 0.27%, closed at 6,606. So, guys, here's something that I think a lot of people, if they're not paying close attention to their 401ks, bank accounts, etc., when you get into these international turmoil situations, right? We haven't had one about oil in quite some time. It's kind of like a drip torture test, right? The markets kind of suck you in and go, okay, you only lost 200 points today. But what you got to look at is the culmination of the losses, right? So here's my point. You take today's 200-point loss. You take yesterday's 768-point loss, right? You're shaking your head. Yes, you're talking almost 1,000-point decline just in 2 days. And then you add in other days where we're down 300, 400. I mean, it's been a while since we've had any type of significant gains in the market. And so that adds up. And this is why I keep emphasizing, check your accounts, check your allocation, check your risk tolerance. This is the time that you want to make sure you are positioned exactly where you need to be because it will come back and bite you if you fall asleep at the wheel. It's what I call the ostrich scenario, where you're burying your head in the sand like an ostrich does. You're not looking at your accounts. You're not logging in. You're not checking your 401k. You're just waiting for the quarterly statements or monthly statements to come in. You can't do that. Before you know it, if this thing continues, you're going to be down, significant amount and you're not even going to realize it. So this is a time to really, really pay attention to things. All right, speaking of the oil, let's go to the commodity side. Just a 29-cent gain. Again, I think we went up to 98 and some change today, if I remember correctly. As I said on the show yesterday, and I want to repeat it again today, my feeling is if we hit $100 oil, and this is West Texas. On Brent, we're 120 or so. But on West Texas, you like that one, huh, Dwight? But if we hit 100 and it holds there for a day or two, that's when everyone's going to start to panic a bit. Everyone's okay right now. Again, $80 to $90. We know it's above the normal 70 or so we're used to. We're tolerant of it at 95.71 a barrel, up 29 cents today. But again, that $100 mark, I've seen it over and over again watching the charts. That $100 mark is when the market, meaning the stock market, really begins to get upset when you hit that mark. So there's just an area you want to watch. Now, we're going to be talking about mortgages, again, now that the Fed is out of the picture in the real estate market. But before we do, let's talk a little bit of gold, guys. This is another tough one that obviously gold prices, went to the stratosphere up until this war began. Today, it was a tough day. $78.80 loss on gold, 4,615.80. Now, again, long ways to go before, we kind of get back to that 3,000 plus range before the real rally began. But a question I keep getting over and over again is, why is gold going down, right? Gold is number one, we're all taught gold should be an inflationary hedge. Well, we got inflation. Yeah, scratch that one off the list. Not working this time. Gold's a safe haven, right? We got turbulence in the world. That's not working. So the question comes down to, if you own gold, why are you seeing it going down? Here's the really simple answer. I'm going to go to Dwight's world, the bond market. What's the last thing you want to own, Dwight, in a rising inflationary environment?
You don't want to own any bonds.
There you go. Dwight, what's the last thing you want to own as far as a precious metal when you're in a you're in a rising inflationary environment?
Gold?
You got it. That's exactly right. Think about it. You know, Aaron's smiling. You don't get any dividends off of gold. It's obviously trades all around like a stock does nowadays. All the things that you were all brought up to know and trust and believe in as far as gold, throw them out the window. It's all changed now. It's again nothing more than almost like owning a bond at this point. And so that's why it's coming down. So as long as these inflationary fears are in front of us, as long as there's this turmoil going on around the world, I see more downside risk on gold at this point. But now here's the problem. It's not just gold, it's really all the precious metals. We're seeing significant pullback in silver prices. We're seeing significant pullback in copper prices. One of the few areas that is really going up is LNG, natural gas. Yesterday, of course, Iran via a drone hit the world's largest natural gas facility in Qatar. And I watched the video on that, and I just can't believe how big this place is. But just visualize. Yeah, visualize like, if you drive by, let's say you go down to San Francisco area, drive by some of the oil refineries down there and you see those big, massive storage tanks. Imagine those, I don't even know how many there are there. And the drone came in and hit one of those, I think just to kind of prove a point. And so now the world is calling out to Iran saying, look okay, oil is one thing, but you cannot start hitting water treatment plants, right? You can't start hitting LNG factor or plants and so on and so forth. Yeah, we'll see what Iran does about that. I don't think they care anymore, and that's one of the big risks. And what I think is going to happen back to those Marines, my feeling is I think they're going to eventually end up on that island where 90% of Iran's oil gets shipped out of. Right, that's where it's the oil terminals where all the ships come into. And we bombed that last Friday. We purposely did not hit any of the oil production side of things. Just did a lot of damage elsewhere. And Trump came out today and said, "Look, if this doesn't stop, meaning these drones and missiles, et cetera, going to some of these life-bearing facilities like LNG, like desalinization plants and that type of thing." I forget his exact words. I don't even want to say it, but bottom line is they're going to have hell to pay, is what he said today. So again, we're kind of going to this next level here, guys, and see where we go with everything. So it's every day, every hour, it's different. It really is. It's just it's a very challenging time for investors. I know that. I'm with you on that. You just got to hang tough and do as I said earlier, and that is diversify. Buy on some of the dips. There's some phenomenal deals that are out there right now, but you got to be patient with it. Don't panic at this point. Like I said, watch that oil hitting $100 and holding there, not just hitting it, but holding there, and that's going to that. And then the boots on the ground. If we end up getting that, those are some of the things that are on my worry list going forward. Alrighty, boys. The Fed hit the rate pause yesterday. Are they going to freeze the housing market with that decision? We'll talk about it with Aaron and with Dwight when we come back. First, let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. And that smiling face you see on the screen, Mr. Aaron Clark of Edge Realty, Dwight Millard, that handsome look right there. Dwight Millard of OnQ Home Loans. 204 loss on the Dow today. NASDAQ down 62. S&P gave up 18. And once again, oil up 29 cents, 95.71 a barrel. Big story of the day was the gold price is down $278.80 an ounce. And that 10-year up 2 basis points at a yield of 4.28, as Dwight said, 6.43 on the 30-year mortgage. Amazing, up 7 basis points for the day. Okay, so let's begin our discussion. The Fed's out of the picture, right? We can't count on them like we came into this year doing because of the war and rising in PPI, CPI, et cetera. So let's cut to the chase, boys. Let's get down to this. 6.43, Dwight. All right, you said 6.5. I'm going to hold my question to you because I want to start on the boots. I want to start with the boots on the ground. Aaron Clark, where is the level where people are going to go, I'm not doing this? Is it 6.5? Is it back to 7? What's your take on that?
I mean, here's the thing is people that are doing stuff are probably not going to be pushed out too much until you see some major swing and major news that it's going to only get worse type thing. But as far as people that are kicking tires, might be on the fence, I think they're going to do a lot of, pulling back and saying, yeah, just not right now, or I'm going to hold off, especially if they don't have to. I mean, again, we've been talking about it. Most people that are doing stuff right now are the have tos, be their
Yes.
job change, death, divorce, whatever. So those people are still going to be doing stuff no matter what. And buyers are going to be out there buying their stuff. But the ones that have a choice, I mean, why would you do anything right now, really?
Dwight, I thought of you this morning. CNBC did an interview, and I forget the gentleman's name. I'm sure you know it because you're obviously a massive Miami Dolphins fan. The owner of the Miami Dolphins, and he's into F1 and everything. Older gentleman, very heavy into real estate. And he said, to your point, Aaron, he said, why would anybody take out a mortgage or buy a house right now if they don't have to? There's too much uncertainty in the world, too much uncertainty whether they're going to have their job because of AI, too much uncertainty, about where rates are. I mean, he just went down this whole list, and it made a lot of sense. And I was surprised to hear it from a guy like that. But Dwight, what's your take on that? Let's go to that same question to you. Where is the pressure point now that we know the Fed's out of the picture? Well, yeah. So 7. That 7's a nasty mark for people. Meaning rates? No, that's an uneducated salesman's logic. That's why I'm saying that. Sign right here on the dotted line now.
Well, and the other thing to realize too is high rates don't kill demand. They're going to delay it. You know what I mean? So eventually people are going to get to a place where they're ready to pull the trigger again. And it's just going to be that much more people ready to do so.
Okay, that's where I wanted to go. The builders. You call on a lot of builders, Dwight. What's the consensus right now? And maybe too soon. I mean, we just had this Fed meeting yesterday, so maybe this is a question I should ask you in 3 or 4 weeks. I can't imagine these builders are thrilled with this. First of all, whatever happened to all these great incentives that we talked about, January, I think it was, where the government's going to step in and try to ease the housing market and do this and do that. All that's gone by the wayside. Not what, or at least no one's talking about it. But how much can these builders tolerate right now? If we get back to 6.5, or I mean, think about it, folks. Let's go back just real quick here. Let's pause for a second. What, Dwight, 3 weeks ago at the most, 599? So let's use that same logic. So you're up, let's just round it up, almost 0.5% in the 30-year mortgage rate in 3 weeks. So here we are at 6.43, another 0.5% in the high 6.9s, right? You get a bad something happened, boots on the ground in Iran, whatever it is, and guess what? Now you're at your 7. What are these builders going to do? Are we going to see a massive amount of incentives coming back again? Because didn't you say a few weeks ago the incentives are starting to diminish a little bit?
They were.
Yeah, exactly. They were. Yeah. Be so frustrating. Longer. Yeah. Those are the ones. Have either one of you heard anything from any of your builders as far as complaining about higher input costs, lumber and all the input costs that go into a home as inflation, especially PPI, which is the wholesale side? Are you hearing any mumblings about that at this point?
Not yet. I'm sure it's coming with gas prices because of the cost of goods to ship and all that kind of stuff. I mean, the biggest thing for them right now is they need not just builders, but everybody. You got to get out in front of it. You don't want to be the guy that's at the top of the hill chasing a ball, rolling down it. You want to be down the hill a little bit, getting ready to catch it. So, that's the reality of it is be prepared, price things correctly, and get out in front of it, get your product moving.
To the price of oil? Oh, you mean to the houses?
Goods.
Yeah. Well, easy 10. Easy. I mean, what did we see? What did we see? What did we see in after Liberation Day in April of last year, and all the tariffs became in? Didn't we kind of see 20%? For some reason that number sticks out in my mind. Kind of a 20% on average increase, Aaron. Dwight?
Yeah, it was something like that.
Yeah. Oh no, I mean, medium price home 600, 10%. That's $60,000 additional cost. But they can't last that long doing that. Well, see, that's the biggest issue that no one is paying attention to. There are no signs at this point, and I God knows I don't want to be pessimistic. I'm just stating the facts. There are no signs at this point of this confrontation coming to an end. We've obliterated their Navy, their Air Force, everything else. I watched the show last night, Aaron, because you're a tech guy. We're now relying upon Ukraine to bring in their drones and their drone pilots because we're sending missiles that cost, they showed one, I think it was a Sidewinder missile. God, what'd they say? It cost $4 million when they came off the jet. And they've got these drones, literally wholesale cost. You can buy a Ukrainian drone that are shooting down Russian missiles, etc. It costs Ukraine $1,000 to build that drone. We're now bringing them over and saying, okay, guys, we've helped you out a lot. We need your little $1,000 drones because they can't make them fast enough. The whole world is starting to buy them from Ukraine. It's like they're now the hero, right? So my point of all that is, what's different this time around is You've got drones, you've got AI defense weapons, and so on and so forth. How can this thing come to a quick end? That's the point I'm getting to. I want you guys to think about that. How does this thing come to a quick end and settle down my markets and your markets, right? I think that's the $1,000,000 question. Let's wrap it up with Kristen Snow right now, Traffic Center. Kristen, welcome back to the Jon Sanchez Show on News Talk 780 KOH. I told the boys, I'm like, what was the question I asked you? I've got so many things going through my mind right now. I was like, what was the question I asked you before we went to break? I'll just show my stupidity here. Aaron, let's start off with some phone numbers. Your numbers.
673-6700.
See, you're going to miss not being on this show when Corey gets back in the swing of things. You're going to miss Dwight and I promise you. Where else can you have such laughs and education and for
True.
1 hour out of the day, right?
Yep, that's true.
In live senior moments. That's right. Oh, God, don't tell me about that. You realize I'm going to be eligible for Social Security next week? No, I'm next week, March 24th, 62. Social Security eligible. I just graduated Worcester, man. What are you talking? Social Security age? Yeah, no kidding. Yeah. It's over. Yeah, I know. Yep, exactly. Dwight, your phone number, please. Thank you so very much. All right. So our topic has been the Fed hit the pause button. Powell says we're in no hurry. They're going to be data dependent. We hear that every single report. Realistically, there's no way in heck unless Kevin Warsh, who is, again, looking for Senate confirmation, and some of the Dems are saying, nope, he's not going to get it. And as we discussed at the beginning of the show, you could see Powell stay on as pro tem, which means more of the same, right? No interest rate cuts. The president had a few harsh things to say about Powell again today, that, they're moving forward with the lawsuit against him and so on and so forth. So Dwight, I'll start with you as far as our wrap up is concerned. But put those arms around everything we've talked about today. The Fed out of the picture, rising oil prices, a very jittery stock market, very jittery bond/mortgage market. What's your advice to everybody right now? That's great advice. What's up? And real quickly, tell the audience what the 3-2-1 is. So if you're getting quoted 6, your first year rate's at 3, and then, or 2, excuse me. Oh, you get 3 off that. Okay. I know 6 minus 3 is 3 last time I checked.
Wow.
Talking about senior moments there. You need to pull your shoes off or something and start counting the toes? Yeah, exactly. No,
Yeah, because you're paying for that rate.
Oh, yeah. Ain't nothing free, right, boys?
No.
Okay, so stay the course, continue on. And remember, we always know this. The world, there's always clouds before the sunshine, right? And you can't derail life plans like, going from a small house to a big house or any of these things like that. Still live your life. But just, again, our purpose of telling you all this by no means is to be pessimist, but the purpose is very simple: to keep you educated. You have to understand what's going on. I'm finding so many people, they've got the mental exhaustion. They're tired of it. They're turning off the news. They don't know what's going on, which is human nature. Aaron, 10 seconds, your final advice.
Yeah, I mean, most people are waiting for the market to change, but the real opportunity is going to be learning how to work with inside this market that we have. So
Beautiful.
We'll work it out. We'll
leave it right there. Excellent advice, boys. That was a lot of fun. A lot of things we talked about. And don't forget, you can pick us up on YouTube. You can pick us up at your favorite Spotify, and all of the podcast sites out there. So thank you, boys. That was great. I wish you guys a great weekend. I'll be back with everybody tomorrow on the Jon Sanchez Show. God bless. Have a great afternoon.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited and Equal Housing Lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.